Ladies and gentlemen, good day and welcome to Wpil Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Wpil Advisor. Thank you.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Wpil Advisors. We represent the investor relations of Wpil Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Prakash Agarwal, Managing Director, and Mr. K.K. Ganeriwala, Executive Director. Without any further delay, I request Mr. Prakash Agarwal to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good evening, everyone, and welcome to our earnings conference call for the fourth quarter and financial year ended 2023. Before we begin with the performance for the fourth quarter and the year ended 2023, let me give you a brief introduction about the company for some of those who might be new to the company. Wpil was incorporated in 1952 and is a multinational pumps and system company headquartered out of India, with diversified operations covering the entire gamut of the pumping industry. With the company's rich experience of more than 71 years in designing, developing, manufacturing, erection, commissioning, and servicing of pumps and systems, over the first 50 years, the company focused on developing its core technology of centrifugal pumps and building a robust manufacturing infrastructure to support its business. This was built in tandem with India's industrial growth, and the company is proud to be a major part of the conventional power growth story. After consolidating its position as a leading pumps and systems company in India, we expanded our operations globally through various inorganic acquisitions in Italy, France, Switzerland, South Africa, Australia, and Thailand, which have strategically turned around and integrated well into the group. We have 12 global manufacturing locations covering the entire process of pump manufacture, from casting, fabrication, machining, assembly, and testing, and we developed our long-standing tradition of producing specialized engineered pumps for various commercial end markets. Secondly, we established our turnkey projects division to provide end-to-end flow solutions across industrial, irrigation, and municipal sectors. Looking ahead, we envision good growth in both our core markets, engineered pumps and turnkey projects, as we become an integrated flow solution provider. With that said, let me take you through the consolidated financial performance of the company. For the fourth quarter ended financial year 2023, the company delivered strong revenue growth driven by international business and turnkey project business. We reported a consolidated revenues of 574 crores, an increase of 36% on a year-on-year basis. EBITDA stood at 119 crores, which grew by 50% on a year-on-year basis, representing an EBITDA margin of 20.75%. Profit after tax stood at 79 crores, witnessing a growth of approximately 31% on a year-on-year basis, with PAT margins at 13.83%. For the segmental performance for the fourth quarter, the product division revenue grew to 257 crores, representing a growth of 26%, with EBIT margins of 23.40%, while the project division revenue stood at 317 crores, witnessing a growth of 45%, with EBIT margins of 21.91%. For the financial year ended March 2023, consolidated revenues stood at 1,785 crores, witnessing robust growth by 51% on a year-on-year basis. EBITDA stood at 325 crores, which grew by 44%, representing an EBITDA margin of 18.19%. Profit after tax stood at 220 crores, a growth of approximately 86% on a Y-on-Y basis, with PAT margins being reported at 12.31%. For the segmental performance for the year, the product division revenue stood at 902 crores, representing a growth of 19% and EBIT margins of 19.29%, while the project division revenue stood at 882 crores, representing a robust growth of 108% with an EBIT margin of 18.22%. The standalone business revenues nearly doubled to 1,002 crores from 530 crores, while the international operations grew to 794 crores from 664 crores in the previous year. On the operational front, stabilizing commodity prices supported strong margin performance across businesses. The international business was driven by strong performance, primarily in the infrastructure development in the Middle East, North Africa region, where we are supplying from Europe. Continued focus on the Jal Jeevan Mission and Amrut 2 by the government augurs well for the medium term with new contract wins. The outlook on nuclear business in Europe is extremely encouraging for the Ruchi business. Lastly, I am pleased to announce that the board has recommended a dividend of 20 rupees per share for the year. With this, we open the floor for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Ishan Pandey from Old Pine Advisors. Please go ahead. Mr. Pandey, please go ahead with your question. Mr. Pandey, if you have muted on your phone, please unmute yourself and go ahead with your question. Since there is no reply from the line of Mr. Pandey, we'll go for the next participant, and that is Divyesh Mehta from Dinero Capital. Please go ahead.
Sir, I have a few questions. First of all, congratulations on the good set of numbers. Sir, I just wanted to understand that of our total domestic order book, which is of around 3,955 crores, how much is contributed towards O&M part of the business?
You have more questions, or should I start answering?
No, there are more questions. I'll say all the questions together.
Please.
So this is my first question. Second thing, sir, just wanted to understand on the domestic business side. So when we talk about the domestic business, what I understand that there are few government triggers which we can use as a strong trigger for next 3-4 years. So like Jal Jeevan Mission, as you said, the water supply scheme, which should be accelerating over the next 5 years in terms of the key revenue growth for us. So what kind of opportunity do we see from such kind of orders in future where we can get an visibility in terms of revenue and in terms of the domestic growth of the business?
Okay, so I'll answer that. First is the O&M business is roughly about 600 crores in the 3,950 order book. And secondly, I think what has to be seen here is that the project business which you mentioned in the Jal Jeevan, we have an order book of roughly 3,600 crores today.
Okay.
Last year we executed about 800 crores. So, and these orders have to be executed in roughly 3 years. So we have a very good, we are more concerned with execution ramping up to meet the requirements than the order book right now. However, the water business in India on the turnkey project side with Jal Jeevan, which is the rural water supply, and Amrut, which is the urban water supply, is typically between 1 lakh, approximately 1 lakh to 1.5 lakh crores a year.
Okay.
The opportunity is very big, but we are right now very content with our order book, and we are looking to improve our execution.
Okay. Okay. And sir, there are few things like the European subsidiary, which was constituting around 80% of international revenue, the Grupo Tria, the company which we acquired, sir, long back, which was a turning part also for our overall international business. how do we see over there in terms of improvement of our technology and R&D and everything over there, sir?
I think, one of the big strengths, as you mentioned this year, and which is very, very encouraging for us, is that the international business and the project business have both stabilized and given a strong performance. So we have been building these businesses up. They have stabilized. Margin performance is good. Order book is good, and the sector is good. As I mentioned, one regarding the with the high oil prices, the Middle East, North Africa region, yes, one is investing in oil and gas projects, and the second is investing in infrastructure development, like, for example, countries like Egypt, Iraq, etc. And we are part of both of that. So I see good opportunities, and with a strong business model now in place, we see good growth.
Okay. And sir, one last thing from my side. So just wanted to understand on the raw material side. So now, since there has been a stable raw material pricing for us since last few quarters, so how do you see going forward in the future, since this is a major component for us, and it has been also and contributed towards the good results also for us. So how do you see this thing panning out in next 2-3 quarters going forward?
I think there are two questions. One is that the raw material prices are more in relation to the previous year, where we had abnormal spikes due to COVID, post-COVID. Yeah. And that has stabilized. You can see the steel prices have really stabilized well. The second is that primarily our business model is to focus on our EBITDA in a range, which is roughly between 15 and 20%. And when we are, and work on growth from there. So I think that's a mandate for us, and we are very focused on that.
Okay. Thank you, sir. That's it from my side.
Thank you. Next question comes from the line of Samir Palod from Fund Advisor LLP. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Hi. So thank you for taking my question. Congratulations on a very good set of numbers and for a informative presentation as well as the call. So appreciate that. So 2 or 3 questions. Since this is the first time a call is being held, if you can give us a sense about this EPC business in India. Why has the working capital cycle changed, or you think has it changed? Because we are all aware of sort of the earlier massive receivables and change of scope, and then claims not being admitted in the EPC sector. So if you can just throw light on why is it different this time? Is it different this time? How do you see that panning out?
I think you answered the question primarily in your points. You mentioned claims not being admitted. So I think the clear receivables, admitted receivables, are cleared by all states and centers within 2 weeks or 3 weeks of the invoice being registered. So I don't think people have an issue on receivables if they are admitted claims. Arbitrations, additional claims, contractual issues, those are a separate matter. And I think it's how you recognize that. If you recognize as part of your normal invoicing and debtors, then it creates a receivables issue. So I think in the past it's generally been that rather than clear admitted receivables.
And you're seeing far more favorable working capital terms in terms of advances before you start work, etc. If you can just tell us a little bit on what's happening on the ground for these projects, would be very helpful.
I think most importantly, what I can tell you from the ground is what we do is that the first is the space is quite large, as I mentioned, between 1 lakh to 1.5 lakh crores in the water business, roughly. And in that, we are very selective. So there are certain types of projects, certain sectors where we feel we can add value, preserve our margins, and the terms and conditions are good. All the Jal Jeevan Mission, for example, is well funded, and most of them are done by corporations. So I think a bit of in-depth study into each individual type of job is relevant. I think water supply is generally been, and the Jal Jeevan or the Amrut schemes are done by corporations. So the funding is very, very secure.
And you would do these projects only where I'm guessing between 15 and 25% of the sales would be from your own manufactured products.
No, we see an opportunity. Yes, that would be part of it. We see opportunities in the states, and like the Jal Jeevan Mission, when it was announced, we saw it as a good opportunity to expand, and I think we are riding it well. And we feel proud to be a part of this story, the water supply story in India. And I see each of these contracts having a long-term relation. We are looking at O&M contracts. So we are very specific of the O&M contracts which we can enter into as you become an integrated player. And yes, one of the areas is irrigation. We have scope where the percentage of our own products is large.
Understood. And sir, primarily, if I understand, international business is much more of spares and maintenance business rather than new pumps being sold. Is that understanding correct?
No, it's not that. What is highlighted there is the strength of the aftermarket. First of all, we are in engineered pumps. All the large engineered pumps manufacturers and the global pump corporations are working in engineered pumps. And they all mostly have a very strong aftermarket business because it's a lifetime. You want to be part of the life cycle of the pump. So in engineered pumps, you have a 25-year life cycle typically with the client. So you have a scope for aftermarket upgrades, brownfield expansions, etc. with the client. It's not a use and throw. So I think the big characterization here is something below a 5 kilowatt, 5 horsepower range, which would be a use and throw, whereas our products are mostly, with a system life of about 20-25 years.
So out of your 800 crore approximate income from your global company, how much would come from maintenance and stores and spares, etc., and how much would be new pump sales? Just a rough cut number.
Roughly, you can take it, the aftermarket is between 30 to 40% and 60% to 70% would be new products.
Okay. And how do you see the new product business growing? Because that will eventually feed into your sort of maintenance business, right? So how are you seeing that business from a growth perspective?
So we are seeing opportunities there. Like I mentioned, in the Middle East, North Africa, where infrastructure is being developed, there is new pump supply. But in oil and gas, there is new pump. For example, Bharat has just announced 100 new reactors for the nuclear business, so those will be new pumps. But in between the new pumps coming, you have the aftermarket which sustains you.
Right. And some of these geographies, sir, like Iraq and Egypt, how is the sort of payment structured, or are these multilateral agency funded type of projects? We directly deal with contractors and our payments are secure. We always work with very, very conservative payment terms. Okay. And sir, just overall, if you look at over the next 2-3 years, what sort of growth would you be comfortable projecting? More a longer term sort of thing? Is this now, are you seeing good international as well as local opportunities which would enable you to continue growing at the sort of numbers that you've done in the last couple of years?
Yes, sir, of course. I think the opportunity and the business model that we have built up, is highly growth oriented because we have very good footprints and very good client relations across the world. So moving into new geographies, new products, new sectors, we have the bandwidth for that is number one. Secondly, the major threshold which we achieved this year and our margin protection and our balance sheet gives us the strength to expand both organically and inorganically.
Sure. Sir, and if you allow me one last question, we're noticing that a lot of the international subsidiaries are also, there is a significant amount of minority interest that gets leaked. So is there any plan of sort of for the listco Wpil to consolidate ownership of the overseas subsidiaries eventually?
Yes. It's a priority based, and cash flow based challenge, and we as a group, as a promoter, when we launched these international operations, we had to step in and support the growth plan because it was new at that time, the international transactions, and for some time the businesses were underperforming. But now that they are performing well and we see good robust cash flows, yes, we will ultimately move in that direction.
Thank you. Mr. Samir, we request that you return to the question queue for follow-up questions. Next question comes from the line of Kashish Shah from Sushil Finance. Please go ahead.
Hello. Thank you for the opportunity. Firstly, sir, congratulations for the good set of results and for good dividend numbers. I have a couple of questions. So first is, sir, around the Ruchi nuclear one. Can you explain what kind of opportunities are there and what are we looking at for next couple of years or more?
Yeah, I think what happened last year was a very important year in the nuclear business, wherein Europe termed nuclear energy as green energy. So that has, after Fukushima, a lot of projects in Europe were on hold, but this has led to a lot of new projects being either initiated or, under design stage, or even doing some groundbreaking. So 100 new reactors are proposed over the next 10 years in Europe, which is a very, very big opportunity because we are one of the strongest players in Europe. And so it's so large that we really have to think about how we can best utilize this opportunity.
And sir, what would be the approximate value for this 100 new reactors? Does it cost approximately?
Just to put it like this, 100 reactors launched nuclear typically is a very cyclical, long-term, cycles. For example, if all 100 reactors, even a reasonable market share would be impossible for us to deal with. However, we have to see the point is it's a general direction. 100 reactors, we see them coming on stream in the next 5-10 years, significant portion. Just to quantify, a typical reactor has approximately between 5 to 10 million of our product.
Okay. All right. So my second question is around the international order book. So our international order book is around 661 crores, which is roughly around 1 time of our international sales. So are we looking at same kind of number, or is it do we have a longer vision or increasing the order book position, international one?
So let's look at it in the segmental view. Is that the product order book is not so relevant because they are generally shorter term. We're talking 6 months to 12 months at the max. So therefore, you are getting, if you have a very big order book, it's not good for you. So we will see the growth. We see growth in opportunity, but it will not be so prevalent in the order book. The order book is more relevant for the projects, which are roughly 24 to 30 months.
Okay.
So I think the project order book shows you visibility in the growth there, but the product order book is not a very, it's a short-term, short gestation orders.
Right. And so what kind of margins do we expect for the international business and for the product and project both going ahead?
As we said, as a company, we want to focus on EBITDA margins between 15 and 20. So when we get to 15, we start focusing on the margins, but when we get to 20, we are looking at revenue growth.
Okay. Okay. So my next question is on the, do we have any kind of inorganic growth opportunities since we have such a good cash and bank balance?
Yes, I think that's a area, which is very exciting right now because I think the present scenario, especially with interest rates going up in Europe and America, and I think that should allow us some opportunities. We are exploring opportunities.
Okay. All right, sir. That's it from my side. Thank you so much and all the best for the future.
Thank you.
Thank you. Next question comes from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, sir. Good afternoon. So my first question is, in terms of the mix between the product and project. So, is it going forward also, similar mix is likely to be there of around 50-50 kind of a number?
One is yes. I think we would prefer the product to be a bit higher. The project is opportunity based, as we said, when we find the margins. The project opportunities look very good with the good order book, with good margins in the order book. So we will drive that, but we are focused on maintaining this balance and improving this balance towards product. 60-40 would be a good balance for us. 60-40 would be a good balance.
Okay. Got it. And sir, in terms of margins, for a project business, the kind of margin that we are doing is extremely good. I mean, so can you tell us, and also if you tie it up with the kind of working capital that we have, if you can tell a bit about, how are we able to do this, in a project business, this kind of a margin with very decent working capital? What are the parameters? How do we bid? How do we screen and filter the project? Can you talk a bit about that?
We are very selective in the project business. As I said, I think one of the big strengths comes from being an integrated flow solution provider, whereas we have very good client relations, very strong engineering, and good project management teams. So if you see that we haven't really pushed our revenues. With a strong order book, we are not talking of, increasing revenues drastically. So I think that shows itself, and that's been our main forte, to focus on margins and good execution and be highly selective.
Okay. So on the product side, we are doing around 20% EBIT margin. Do you think that kind of a number is sustainable, as we grow?
Yes, as I said, between 15 to 20 and 20 on the product, yes.
Okay. So product specific 20 is sustainable. That's the right. Okay. Great. Thanks. That's it from me.
Thank you. Next question comes from the line of Alisha Mahawala from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. So just a clarification, the international order book that we have is 655 crores. This is completely product, right?
Sorry, could you repeat, please? I missed the last word.
The 655 crore order book, international order book, is completely product?
Yes. A very small portion is long-term projects, which are over, say, a longer period, recognized as projects, but they are products, not turnkey projects.
Understood. And the domestic order book of 3,900 crores, is this completely project or does it have some component of product?
It has got 3,600 of projects and about 350 crores of product.
And this 3,600 is entirely Jal Jeevan?
No, it's got irrigation, mix of all three, urban, Jal Jeevan, and irrigation.
Okay. And it is the project piece which is executable over 3 years?
Yes, 24 months to 3 years, 2 to 3 years. And there is a 600 crore O&M in that, so therefore,
600 crore O&M in the domestic order book?
In the 3,600, yeah.
Okay, understood. And how is the working capital cycle different between the domestic and the international business?
I don't think the working capital, if you see our financials, it's come down from 190 to 79. So I really don't see working capital as a major challenge or issue.
Okay. And while we understand,
we are very, very conservative on our working capital and balance sheet management.
sure, understood. And while we do understand that we're not willing to call out margins of the India and international piece separately, but will there be a substantial difference in the margins between the two?
Not really. What happens is that we have different moving parts. So that's why, as I mentioned, we are looking at a gross, between 15 to 20% EBITDA margin. But certain moving parts change it, so the aftermarket changes it, certain segments change it. So, our business, one thing is that it's best to look at our business in an annualized basis is one, and to look at margin in a band. Because you could have certain movements or certain sectors performing at one time, so it's a bit cyclical in that way.
And our working capital days have obviously come down significantly, like you were mentioning earlier. What has been the key driver for the same? How have we managed to tighten it to such a large extent?
We are very focused on it, very selective. We are not taking bad jobs. We are, I think one thing must be appreciated is that with a strong order book, our revenues are in check. We are not expanding revenues to such an extent that we have working capital issues. So balance sheet management, margin focus, and then revenues.
Got it. Good. Thank you.
Thank you. Next question comes from the line of Devnash Nigotia from Simple. Please go ahead.
Yeah, so thanks for the opportunity. Sir, in case of nuclear pumps, what are we exactly looking to supply? Is it coolant pumps or is it something else? And also the opportunity size, you mentioned unit economics per reactor. For how many megawatt did we mention? I think 5 to 10 million. If you can reclarify on that as well.
It's a bit different from the Indian context if you are taking a reference from there. Most international reactors are very large in size, roughly 1700 megawatt. And these are EPR2 reactors by the French, EDF. Okay. And this is not there in India. India is much smaller reactors, number one. And the pumps are different. So what happens is that there are two cycles in a nuclear plant. One is the primary cycle and the secondary cycle. So we are supplying mostly these critical pumps in the primary cycle.
Okay.
That's the one. And the figure I've given you is approx because it varies depending on, different clients.
So $5 to $10 million. So that translates to
euros per reactor is roughly our area of opportunity.
Okay. And okay. So can we draw? So how is it different from coolant pumps? Because what we understand, the primary pumps are coolant pumps. It is generally installed in reactors in India. I'm just trying to understand what is the difference here.
So the primary coolant pump, the reactor coolant pump in these reactors is very, very large. They're much larger, and they are used single coolant pumps, and they are primarily supplied sometimes by EDF themselves supply that.
Okay.
So I think it varies. The business model in the nuclear business is different as followed in India and as followed in Europe.
So we are trying to install some ancillary pumps over here.
Yes, you're right in a way.
Okay. Got it. Thanks a lot.
Thank you. Next question comes from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Congratulations, sir, on good set of numbers. Sorry if the question sounds repetitive. I missed the earlier part of the call. I just want to understand what is there the management is guiding towards any growth guidance on revenue side of it for FY24?
We are very strong. We are very confident of good opportunities for growth going forward, but no guidance. We don't want to make forward-looking statements.
Okay, sir. Can you quantify the size of the tenders or orders that you have participated with, the outcome of which is still pending, if you could quantify on international and domestic level?
So, as you mentioned, that the order book is a good guidance for the project business. In the project business, we have 3,600 crores of order book, and our revenues last year were about 800 crores. So, and these projects are typically executed in 2.5 to 3 years. So,
no, sir. I actually meant not the orders that you have already received, the orders which you have participated as of now, and results are pending.
Yeah, what I was saying is that because the order book is quite good and the revenues are not in line with the execution requirements, so we are focusing more on execution. The order book is sufficient and we have sufficient opportunities. I'd like to put it like this.
Oh, okay, sir. Okay.
You know, the order book is 3,600 to be executed over 2.5 to 3 years, and we have executed at 800 crores last year.
Okay. So just one last question from my side. Can you, sir, on the data point, out of this 3,600 crore project you've got, how much would be related to Jal Jeevan? And could you also quantify in FY23 out of 1,785 crores, how much of the project was related to Jal Jeevan?
Jal Jeevan is quite significant in this. The order book is completely divided between Jal Jeevan, Amrut, and irrigation. So I think Jal Jeevan would be more than 50% presently because it is a major initiative in the water sector by the government. Second, in the execution of 800 crores last year, then Jal Jeevan would be close to 55%.
Okay. Thank you, sir. That's all from my side. All the best.
Thank you. Next question comes from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Namaskar, sir. And thank you for this opportunity. And sir, we hope for the continuity of the calls going ahead. Sir, last year, if we take the split up of the revenue, it is almost 1:1 between the pumps and the project. And now with the higher proportion at the project business, what should be the mix for the current year? Any breakup that you could provide to us?
As I mentioned, that the project opportunity is a good opportunity, very positive for the company, and we want to do our best with it. But at the same time, we are working on how to enhance product revenues with both organic and inorganic growth to keep a ratio of close to surely about 50% and closer to 60% product.
So out of the total top line for the coming year, 60% will be contributed from the product segment, the pumps and accessories.
I want to say that presently the project business is looking very strong because of the strong order book, but we are looking at ways and opportunities to try to keep our balance.
Okay, that is understood. So just to get a ballpark number, we are looking for a 60-40 ratio between the product and the project business going ahead for the current financial.
Our target is to maintain between roughly 60-40 ratio.
60 for the product and 40 for the project.
Yes.
Right. And with the moderation in the raw material prices, is it safe to assume that there should be incremental margins also going ahead, or those are not going to those are going to remain in the same vicinity as have been earlier?
our aim is to focus on the margin has stabilized. The commodity prices have stabilized very positively for us. Now, going forward, our aim is to keep margins between 15 to 20%. We are at the, so if we are reaching 70%, we would look at revenue growth, and if we are getting to 15%, we would go to margin focus. So that's the way we work.
And 20% is the blended margin, sir?
Yes. That's the top, that's the band in which we want to operate. Blended margin.
Right. So for the Jal Jeevan Mission, you did mention that it's a very pioneer project of the government and we are participating in the same. So could you provide us with state-wise breakup from which state is offering the best traction out of the order booking of 3,600? How much is towards Jal Jeevan Mission and if you could provide us the state having the highest percentage?
The state I can provide you, I don't have the details because we don't break it up into that. Jal Jeevan is rural water supply, Amrut is urban water supply, and we work in irrigation. So out of three we are working in. The highest Jal Jeevan business we have is from Madhya Pradesh, which is one of the largest states, and therefore there is a sizable rural area which needs to be covered.
Okay. And Uttar Pradesh, sir, any proportion you can think, because I think a lot of orders are showing people like Bawad Bitek and others are also giving order book positioning good traction from the UP government. A lot of tendering is happening. So do we have a good pie in our order book from the state of Uttar Pradesh also?
The water business in India roughly is approximately 1 lakh crores. Maybe 1 to 1.5 lakh crores a year, and we are selective. So we are very happy with our order book. We are not pushed on the order book side, and we want to be selective. So wherever we find good opportunity and matching with our requirements, we are focused there.
And one small question for the pledge part, sir. We have often seen promoters pledging some part of their holding. So any key reason for the same that led to, and also, sir, we also find that because of the higher promoter holding, the liquidity in the stock is also very low. That means it has a very high impact cost for investors. So if you could address these issues, sir, going ahead.
Two areas. One I can't address. The high promoter holding, and we believe in the company, so that's there. But the second is that I think our state pledge is very nominal, and it was for some short-term fund requirement.
Sir, for the impact cost for investors, I did not request it for the lower promoter holding. It is the impact cost for investors that needs to be addressed from the company side only. Being a low floating stock, thereby it creates a lot of impact cost to buy and sell the stock. So I was just hinting towards the splitting of the stock if the management thinks so. That was my understanding, sir. And for the pumps and the yes, sir.
Sorry, you finish, please.
Yes, sir. And for the pumps and the product segment, the order book the order book number I mixed. What is the current order book for the product side?
The product side is roughly about 3,600 projects and 1,000 crore product.
And the executable period for this is 6 months for the product segment. 6 to 9 months.
It differs. We have a lot of moving parts, so a lot of different geographies. But roughly, the order book is not relevant. So, in the product, in the project, yes, for visibility, it is important.
Okay. Anything else that you would like to answer on the split part? Kindly look into the issue of addressing the liquidity.
We are very happy to have such a good investor interest, and we will review this positively.
Right. Sir, the last point also on the revenue growth which we saw for the product segment was in the vicinity of 20% from FY22 to 23. So this should be the scale trajectory we should be looking for the current year also on a base of 900 crore for the product segment.
The business model is very strong and good opportunities exist. As I mentioned, that it is our key area to focus on growth. So don't want to make any more forward-looking statements.
Correct, sir. And sir, how should one differentiate between contract, material, civil costs, and employee benefit expenses? If you could explain the nature of the two, and what percentage should it be in terms of as a percentage of your revenue from operations? The contract, material, and civil costs, and the employee benefit expense.
Employee related I can do because the rest are fluctuating with the type of product, type of business. But employee, I think we are very particular about our margins. So we are very particular about our employee cost ratios, and I think with the and we are growth focused. So I think those are not big challenges. I think our ratios are quite positive, and we intend to keep them in this manner.
Right. Thank you for all the answers, sir, and we hope for the continuity. And thank you once again, sir, for addressing our questions in the forum. Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Vishal from Swan Investments. Please go ahead.
Thank you for taking the question, sir, and thank you for arranging this call. Sir, one question regarding the international order book of 610 crores. Can you share the numbers of last 3-4 years similar to what you have shared for the domestic order book?
We will subsequently look at that, but why it's not so pertinent is because as I mentioned, the international order book is product, and those are mostly short gestation. In the domestic, we were trying to capture the growth in the backlog for projects.
Okay. Sir, also can you share the mix of the international order book across different segments like nuclear, water, oil and gas, and industrial segments? So if you can provide that also in the subsequent presentation for next quarter and year also, that will be great.
What we want to say there, it is very diversified. That's why we are not trying to segment that. It's very diversified across industrial, water supply, oil and gas, nuclear. So it's a pretty even basis breakup. But we had given something in our last presentation, if you see that on March, that presentation had a breakup for our European operations, product-wise.
Okay. Sir, also you have said that in the domestic, the opportunity size is close to around 1 lakh crore. So in that, it will be divided into different set of products. So what is your, opportunity size where you would like to tap this bucket? So that is how much big for you?
Very frankly, I think we built a good size and become a good medium-sized EPC player in the water segment. We are happy with our position, and we want to consolidate on this. The opportunity is there, but the business sector is quite fragmented also. There is an unorganized and very large organized players, different. So you have different opportunities. It's very important to be selective. I think some of the earlier questions were regarding balance sheet issues and margin issues, and we are very focused on that. But primarily, I want to say that we are very satisfied with the positioning we have, and we see a good medium-term, long-term horizon.
Okay. Sir, what can be the order inflow in the subsequent year, for example, FY24, in your segment area in this particular business?
Sorry, could you repeat?
Sir, what will be the order inflow in this EPC project business in Jal Mission for 24 you foresee?
I think the order booking, as I mentioned, we will match it to our execution. We have a sufficient, we got a big jump in the order book with the large contract wins in March, and we will match the order booking with our execution, is how I would like to put it, because, it is quite negative to have a larger order book which is not commensurate with your execution.
So, sir, in that case, our FY24, you will be majorly focusing towards execution and the growth in the order book, what we have seen in FY22 to FY23, that will be comparatively lower. Is my understanding right here?
What I mean to say is the execution growth is our focus. The order book is commensurate. It will be matched to the execution.
Okay. Thank you for taking my question, sir. Thank you very much and all the best. Thank you.
Thank you. Next question comes from the line of Divesh Mehta from Dinero Capital. Please go ahead.
This is my follow-up question. Sir, I just wanted to understand that export business completely comprises of product business. So, sir, are we planning to start any project-related business in the export market and overseas market, and any opportunities we are trying to tap specifically?
Yes, we are. We want to see, and we see ourselves an integrated flow solution provider. We are looking for opportunities in Africa, and we are working on those, and we will, that's a trust area for us.
And how do you see as a company in the overseas markets where when it comes to project-related business? Because the cycle over here in India comes to around 2.5 to 3 years in terms of one project completion. So in export market also, it will take same time, same working capital stretch, everything?
It's a bit different because the fundings are a bit different. So we are actually been working quite seriously for quite some time, understanding the dynamics and positioning ourselves well. I think we should see good results. We are confident of what we are doing.
Okay, sir. Thank you, sir. That's it.
Thank you. Ladies and gentlemen, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Prakash Agarwal from WPI Limited for closing comments.
So I thank you very much for attending our earnings call, and we appreciate the investor interest in our company. And thank you again. Good evening to everyone.
Thank you. On behalf of WPIL Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.